This is our Forex blog for July 20th, 2012, and like we do most days, we want to buy the strong currencies versus the weak and sell the weakest versus the strong. That's the first step of our three-step easy trading system. 1. Identify the weakest statistical currencies to be selling and the strongest ones to be buying. I sorted this by the strongest ones on top and the weakest ones on the bottom, and you can see that throughout most of the day the Swiss was one of the weakest ones. The 15-minute trends down, the hourly trends down, the daily, weekly, monthly trends down. Same thing with the euro here. The yen was the strongest. You can see on all time frames the yen strong. The dollar had times where it was strong. However, for the most part, the longer term trend was down. So basically you wanted to be selling the euro versus the yen, and also selling the Swiss yen. So let's first look at the euro yen chart. And we'll scroll over to today. I had this on there for yesterday. Hit the minus key to zoom out a little bit. And you can see basically we're looking for sells all day. It's underneath the hourly moving average, which is in the middle of the line here. Let me get rid of this moving average. This was part of yesterday's blog video. I leave this running throughout the week. One of our new tools that we're going to be releasing sometime next week is an incredibly fast digital signal processing based, for lack of a better term, moving average. I'm going to put a 20 period on here, and I think a lot of traders, because it works so well, are going to use this tool to find out when to buy and sell. This is such a fast, thing that catches up with price that you can use it to get into trades, small loss, get into a trade, 8 pip win, get into a trade, 30 pip win, get into a trade, 40 pip win. And when it comes down to our lower containment bands, most of the time that's the end of the move. It's really up to you whether you want to continue to sell it when it goes down near the lower bands or near the Fibonacci profit targets that I spend 30 or 40 minutes each night drawing. Another one of our systems, and I haven't gone over this in the blog for quite a while, is our narrow range breakouts. Anytime you have a low volatility period, and this is an NR7 pattern, where the euro yen has moved less during the previous 4 hours than it has during the previous 7 4-hour bars, when it breaks out from under there, you're usually going to get some big trends. So seeing that it started to break out at 6, I prefer range charts. I don't have that particular tool on this range chart, but you can see it broke out here, yet a nice win, yet another nice win. It's much cleaner on a range chart. Now, even though the dollar longer term trend is down, when the euro is this weak, you can sell it against the dollar as well. You can see that pretty much, nice little narrow range pattern here, sell signal, broke down, broke down, broke down. And again, when it's underneath the lower white band, it's very likely to reverse. If you see it make a double bottom like this with half the weakness that it had before, and it's way down underneath our statistical likely lows, you're going to get a bounce. This is another one that I should showcase the upcoming digital signal processing trend tool that we're going to be putting in. I'm going to put a 20 period on here, and you can use that as a timing tool for when to get in and out of trades. It's that fast, and it's also very clean. You can see a nice little pullback right here. If you went short, you had a small loss. Short here, small win, 10 pip win, or actually it's probably a 25 pip win, 25 pip win, 40 or 50 pip win. Anytime it kind of chops around like this and breaks down underneath the low, you can see small win and probably 40 pip win. So it's very fast. Just for comparison purposes, this is a 20 period digital signal processing, for lack of a better term, moving average. I'm going to put a 20 period exponential on there. Exponentials are faster than simple moving averages. It'll let you see how much quicker this is. And anytime you get a big move down, it goes above it, it goes down underneath it, and you go short. And a lot of people might just decide to use this for their entries and exits. So again, looking at some of the other pairs on here, the Australian, very strong today. I'm sorry, that was actually yesterday's. It was moderately strong today. The Swiss was also weak. Let me bring up a Swiss yen chart. A weak Swiss, strong yen. This is one that you want to be focusing on selling as well. And as you can see, just down all day long. Nice little pullback here, breaks down, 10, 20, 25 pips. Short again here, 25 pips. Nice little sideways range here. You might have went short underneath here with your stop above the swing. You went sideways for a while and then broke down. You're out. Again, this is a very fast and quick way of reading the trends. And it's so fast and so accurate and so lacking any kind of noise that we're going to be using this to redo some of our statistical trend tools, because it does give entries much quicker than some of the tools we come up with years ago using advanced digital signal processing techniques rather than moving averages to develop statistics. It's much more responsive, quick, and as you can see, very little noise.